Hello everyone. Welcome to Mire Asset Sharekhan Weekly Commodity Forecast. I am Rakesh Khanna, research analyst at Mire Asset Sharekhan, and today we'll look at what happened last week and what it means for commodities in the week ahead. Macroeconomic headlines. What happened for the week? The Dow Jones Industrial Average fell 0.4%, the S&P 500 rose 0.4%, while the Nasdaq Composite Index fell 0.2%. The dollar index rebounded 0.7% to 96.99 last Friday but fell 0.6% for the week. The US 2-year yield fell 4 basis points to 3.52% last Friday and fell 7 basis points for the week. The US 10-year yield was flat last Friday at 4.24% and was just 1 basis point higher for the week. Brent crude oil prices were flat last Friday at USD 70.69 barrel but rose 7.3% for the week. It has risen by 16.6% so far this year. Gold fell 9% to USD 4,894 ounce last Friday and went down by 1.9% for this week. Silver plunged by 26.4% ounce to USD 85.20 last Friday and went down by 17.4% for the week. Year to date, gold and silver are still up by 13.3% and 18.9% respectively. US President Trump nominated Kevin Warsh to replace Fed Chair Powell, a choice seen by markets as supporting a more disciplined and cautious approach to easing. US producer prices rose 0.5% in December, surpassing expectations. Service rebound and non-ferrous metals surged while diesel price fell. Core Producer Price Index, that is PPI, climbed 0.7%, annual inflation remained at 3%, and core inflation increased to 3.3%, both above forecasts. China's Manufacturing Purchasing Manager Index, that is PMI, fell to 49.3 in January 2026 from 50.1, which means factory activity weakened. However, another reading showed the PMI rising to 50.3, the fastest growth in 3 months, helped by stronger output and more new orders, especially from Southeast Asia. What this means for the commodity segment: mixed equity moves and a softer dollar support commodities, but hawkish Fed chair pick and the hot US PPI signal inflation risk, capping rate cut hopes. Brent weekly gain reflects supply tensions, while gold and silver correction stem from profit booking amid easing US-Iran risk. China's BICS PMI points to uneven demand, keeping base metals and energy volatile. Commodity focus. Gold. Gold prices slid 19% from highs of $5,600 per ounce last week, trading around $4,500 per ounce on Monday due to profit booking, margin calls, hawkish Fed chair choice, and easing US-Iran war risk. Long-term outlook stays strong with escalating geopolitical tensions from Trump's tariff on Cuba's oil suppliers and Iran nuclear talks. We raise 2026 price target to $6,000 per ounce. Technically, rejection near rupees 1,68,000 and rupees 1,70,000 per 10 grams triggered correction, but price hold above key moving averages. Key levels: resistance at rupees 1,46,700 and rupees 1,51,000, support at rupees 1,42,500 and rupees 1,40,700. Commodity focus. WTI crude oil. West Texas Intermediate, that is WTI, fell nearly 3% to $63 per barrel Monday after Trump pushed negotiations with Iran, reducing military action odds. Risk premium persists with unresolved tensions. Iran's strike could surge prices 10 to 15% to $80 per barrel, near-term range at $58 and $70 barrel. Technically, rejection at upper trend line led to correction, but trading above moving averages. The key levels to watch, that is resistance at rupees 5,900 and rupees 6,100 and support at rupees 5,475 and rupees 5,200. Weekly price change. Displayed on the screen now is the weekly price change chart for your reference. We can see Brent rose 7.3% on supply risk, while gold and silver corrected sharply on profit booking. Weekly event calendar. Why this week is important. Watch US Fed rate decision, RBI rate cut, China trade surplus data, gold reserves additions, and key global releases for commodity swings. Expect volatility in bullion, energy, and base metals from macro triggers and policy shifts. That's your weekly commodity forecast from Mirai Asset Sharekhan. Stay alert to global cues and key data points, and we will be back next week with another update. Thank you.
Investment in securities market is subject to market risk. Read all related documents carefully before investing.